In today's video, I'm going to be having a look at ESG investing and some ESG ETFs. I'm also going to be looking at OPEC and what's been on the talk of the town. And from there, we're going to have a quick look at the news ahead of today. Hello and welcome to another ACY Securities Hot Topics video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, to get things started off, I have been unwell the last sort of fortnight, so therefore the videos have been a little bit light, but I am back on duties now, so you will be getting them pretty regularly as per usual. Now, looking at what's happened around the world with coronavirus since I've been away, we've had more than 51 million cases of coronavirus confirmed, nearly 52 million, but coincidentally, we also had more than 33 million people recover. And of course, unsatisfactory and unfortunately, we've had 1.28 million deaths so far. Moving on from the idea of the coronavirus situation, but keeping in the mentality and the theme of it, we've obviously seen a little bit of good news coming from the idea of a vaccine from Pfizer and AstraZeneca. Now, of course, this doesn't mean it's necessarily going to get to the public just yet. There are still further phases to go through in testing. And of course, they've also said that they're not entirely certain how long it will last for. So definitely something to think about as investors for the longer term. Now, having said that, there has been a lot of talk about ESG investing, and I've been thinking about it quite actively. Now, some of you might be asking, what is ESG investing? ESG investing, or the acronym, stands for Environmental, Social, and Governance. And really, a lot of them are looking at the idea of perhaps dealing with loftier expectations or ideals over the loftier idea of profit out of it. So some investors who invest in ESG aren't all that focused or concentrating on how much money they're making out of it. They're wanting to do it for a moral reason. However, there has been really good success in the last year with ESG investing because a lot of them tend to be a little bit tech heavy. Now, if you look at what's gone on with the NASDAQ in the past week, it's been pretty red. And ESG stuff is starting to feel it as well. Now, whilst they are heavily weighted in tech, just some of the examples that I've got on the chart behind me here, we have iShares ESG's Aware $11.6 billion fund, which has got the ticker code ESGU if you want to look it up. They have a 28% weighting. Now, they're not even the biggest. The largest that I've been able to see there is Nuveen, whose ticker number is NUMG, and they have a 35% weighting. Now, obviously, the concern is here that if you have such a high weighting in an ETF on a tech-heavy substance, when you might, in fact, find that we start to get this rotation on the working from home stuff back to traditionals, which is what we've seen over the last week with people looking into the energy sectors and all those original things that we used to look at well before the pandemic, then you might find that you are a little bit overexposed. So definitely something to think about in the long term. Perhaps instead of dealing with an ESG ETF, you might consider picking and choosing what they might already be investing in and place them somewhere else. Of course, some of the other parts to really think about this when it comes to ESG, it's become a very popular way to invest. In 2019, we saw 10 new ESG funds. This year, we've seen 21. So we've more than doubled what we saw in the 2019 period versus in the 2021 period at this point in time. Now, moving on from the idea of ESG investing, I'm having a quick look at OPEC today. OPEC have had a bit of discussion about whether or not they are going to be increasing or decreasing outputs in January. Now, we've previously heard twice that Saudi Arabia and Russia have indicated that they want to have an output increase in January. And this was going back, over the last couple of months, we've heard this. Now, what we're looking at now and what the discussions on the table are about now is whether or not they're going to delay that. And the delay time is between either 3 months or 6 months. So which way we go with that is going to be very, very dependent on what we see November 30 and December 1, which is when the next OPEC meeting is being held. Regardless of that, we're already seeing indicators and we've already been hearing from government officials, particularly out of Russia, who are talking about the idea of perhaps extending it and not having the cuts get reduced so that they can obviously increase their production output by January. And a lot of this has actually come from the idea of what's going on with demand. They have done a report recently via OPEC that has seen, and they are forecasting, that demand is likely to slump yet again for 2021. So that's going to be something for us to really, really consider on the long-term value of what the current price per barrel of oil is. Now, moving on from that, I've got another thing to talk about today, and it does come in threes, is the idea of this scenario. Now, I'm talking about the antitrust crackdown that we're hearing on tech. We've seen them in Europe starting to happen with lawsuits ongoing with Amazon. We've seen them in the US with discussions happening where we've had all of the FANGs having to come in for questioning and testimony, and we've also seen it just in the last week with China. So now we've had 3 separate instances of these antitrust and anti-monopoly sort of things going on. Now, to give you a bit of a picture, this chart that I've got behind me, the pie chart, actually shows you the percentage of weighting on what it really sort of looks like. It's a little bit obscure, but it is pretty wholeheartedly pretty accurate. So we have an image here that shows all of the FANGs or some of the larger mega cap companies versus their counterparts. And you can see just how heavily dominating they really are. Now, the big one we saw last week was from Ant Group. We saw right before an IPO that was going to be the biggest IPO sort of ever seen. They've cracked down, reined in that big company. Jack Ma's been a little bit upset about it, I assume. And of course, we've seen a lot of investors moving their funds to other areas instead. We've seen them move into Tencent, but then we've also heard recently that we're going to be getting a crackdown there as well. So China is really pushing towards reining in some of these really big internet and tech companies to try and curb their growth a little bit, and obviously not have quite as much a monopoly and offer less competition than you would get in the rest of the market. Of course, the European Union has also escalated things against Amazon, which at this point looks like that Amazon will likely lose 10% of its revenue each year from some of these antitrust crackdowns. And the interest is now if the US is going to try and do the same thing. We've already heard discussions, there's been testimonies, we've seen Jeff Bezos and we've seen Zuckerberg have to go in and have discussions with obviously Congress. But what the real question is are they going to break up the companies and their ability to have production lines, i.e. meaning if they produce the product, are they allowed to sell the product? Then we're going to have also the idea of what about if they split it up? So if you've got the case of Google, they might split YouTube, Google and Alphabet and all of their different divisions into separate entities. And the other one might be to introduce new watchdogs, a new form of watching that keeps an eye on what they do. And of course, the last one is whether they're allowed to control their own data anymore, and more particularly, our data that they collect from us. So the real question is, how are they going to target this? And is this going to be a case across the board? Are we going to see different ones across all of the 3 jurisdictions that are currently looking at antitrust? Or are we going to see something completely different? In my vote, if I was going to pick one that I want, I'd want to see the company split up, because it means that we're likely going to see cheaper stock prices and opportunities to actually buy again. So that's the one my preference is. The other ones are still going to leave us with opportunities. We'll have to look into more detail of them when they get closer to the time. Now, in the news ahead of today, we do have a number of different events going on. The major event of today is going to be about central banks. We have 3 different central bank chairmen or presidents all speaking today at the exact same event. So that will be important to keep an eye on. We're going to be hearing from the Bank of England's Governor Andrew Bailey twice today. We're going to be hearing from the President of the ECB, Christine Lagarde, at least once. And we're going to be hearing the Chairman of the Federal Reserve, Jerome Powell, at least once as well. Outside of that, the other important thing that I can see that's probably more of a hotly looked at or anticipated thing is going to be the prelim GDP results for the UK. Outside of that, everything is relatively light on its impact, but still keep an eye on what you're trading, have a look at that economic calendar and make sure that it's not going to affect some of your own trades, or if it is, make sure you're on the right side of it. Now, of course, if you want to get in contact with me or ask some questions about today's video, feel free to shoot me an email at talktoal@acy.com. Of course, everything else of my socials, you're also able to hit me up on, so feel free to do that as well. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.